In the last few days, foreign investors have taken out nearly $1.24 billion from India's stock market. Well, that's a big amount. This big pullout happened after the US government, led by President Donald Trump, who's once again pushing for strong trade policies, announced heavy tariff on imports from many countries. These countries also included India. These include a 10% tax on all imported goods, a 25% tax on automobiles, and a special 26% tax on certain countries like India. Well, these sudden changes have made global investors really nervous. Before this, investors were putting money into Indian stock. Between March 21st and March 28, foreign investors had invested about $3.7 billion into India's stock. Well, that inflow had reduced March's overall outflow. Once again, the new US tariff announcements came, investors' mood quickly changed. People started worrying that these trade policies might lead to a global trade war, which could slow down business, increase their cost, and hit economic growth worldwide. Since January 2025, foreign investors have withdrawn a total of $15.7 billion, and that too from India's stock. In January alone, they pulled out over $9.6 billion. In February, another $4.2 billion. And now, in early April, we are already seeing another wave of exits. This shows how sensitive global markets are to the US policies. Even India's bond market took a hit, with FPIs pulling out about $66 million from regular debt and $484 million from long-term debt investments. Experts say that this isn't just India's problem. America is also hurting. When Trump's tariff raises prices on imported goods, it affects American consumers directly. Everyday products becomes more expensive and companies have spent more to make or import things. They can lead to inflation, where prices rise but people's incomes don't. And when the economy slows down at the same time, it creates something called stagflation, which is very difficult to fix. In fact, after the tariff being announced, even the US stock market fell sharply. The S&P 500 lost over 10% in just 2 days, showing that American investors are also really worried. So, while these tariffs are meant to protect American jobs and factories, they are also shaking investors' confidence, increasing cost, and possibly harming the US economy itself. However, yes, not all is gloomy for India. Our economy is still stable. GST collections are stronger, the manufacturing sector is growing, and domestic investors, specifically small investors who invest monthly through SIPs and mutual funds, are still supporting the market. Also, the value of the US dollar has gone down slightly, which might attract investors back to emerging markets like India in near future. At the very same time, all eyes are on the Reserve Bank of India. If the RBI announces a rare cut or some other positive policy, it could help bring back foreign investment. But this whole situation shows us one thing very clearly. In today's world, what happens in one country can quickly affect many others. And in this case, Trump's tariff plan is not just creating trouble for India, it's creating troubles for United States too.